Okay, guys, great trade here this morning. This is a 5-minute opening range trade with our algorithm firing the entry, and our target went right to our target area, our projected target area. Let's go over this. So if you didn't play my last video we did today, I'm going to make this one a nice short one. Please replay the last video. I'm going to show you exactly how you can mark up a fair value gap and how when the fair value gap comes in with our yellow trigger entry with our algorithm, it creates a great dynamic opportunity to cherry pick which one of these trades could possibly run. And we nailed it this morning. I made this fair value gap before this even occurred on this short and this long here. And I'm going to show you how it coincides with our chart. So first of all, this video is on how to trade the first 5-minute opening range and how to pinpoint when we should be buying or selling using our algorithm. So very simple. The market opens up. This is the first, this is an Rico chart we're using here, a 1-135. But you can use a 1-minute chart to do this. It's very simple to do. And you can mark it on top of your Rico chart. The first 5 minutes of the opening range was right here, this high. The wicks are included in this low. Very simple. That established the first 5 minutes of the opening range. So what you can do after you know the first 5 minutes of the opening range, you can just project it on top of your chart. Put it right on top of your chart. Right here. That's exact 5-minute opening range, exact levels. So right at 9:35, right here, where's it at? 9:35. Yeah, so at this level, right here where my cursor's at, that's when we knew the 5-minute opening range. Okay, this is the first 5-minute opening range off a 1-minute chart right here. Right there. There's your first 5 minutes of the opening range. I want you to keep this simple. There's your high, there's your low. First 5 minutes opening range. Look what happens in the market. The market showed direction which way it wanted to go. It showed energy. It broke out of the first 5-minute opening range. There. So that shows us the market has energy to the upside. If it has energy to the upside, does our algorithm match for a buy entry? Because you just don't want to take a candle close outside of the 5-minute opening range because it likes to close right back inside of it. That's a really bad way to do it. And you're going to get a lot of potential stop outs if you take a first candle close and it goes right back inside of it. We got to qualify the trade. We got to qualify the 5-minute opening range. Right when it breaks out, what happens? It breaks out, we start moving up. Our trend filter now turns green. Our 30-year back-tested trend filter. We want price now, after it breaks the 5-minute opening range, to get a retracement, catch the wrongly positioned traders, and get a liquidity grab inside of our 30-year zone or 25, our 30-year back-tested trend filter or a 25 zone. Now I'm going to show you this little box I put up. I projected this fair value gap buy on a pullback at 9:10 before this even came up at 9:40. And it landed right inside the fair value gap. And this landed right inside the fair value gap also for these two big trades. Look how our triggers hit right inside the fair value gap every time. So for you fair value gap traders, this system, you can qualify which fair value gap should run, because you're going to get a yellow trigger inside with the trend filter pointing in that direction if it's a highly qualified fair value gap entry. So the market broke out. Make this in big white. We broke out a 5-minute opening range. We want to be a buyer now. We want to buy the S&P. We want to be a buyer of the S&P. Broke out. The market likes to grab liquidity in a pullback because it wants to go higher. It wants to try to get it up this low volume node or the 50-day moving average on the daily chart right here, which is sitting up there at 31. It wants to drive to that level, at least to the low volume node or at this level. We have a lot of profit potential from 67.01 all the way up to 31. We have 30 S&P point potential. The market pulls back. It catches the rolling position traders. And we get a yellow trigger entry candle that comes up. And consequently, that's where the arrow fire and your audible alert will come on your computer, right at that level. Because a very simple thing you can do with the system, it broke the 5-minute opening range. It broke right here, the 5-minute opening range. You look for the first pullback and see if you can get a yellow trigger or an entry inside of my 25 zone with the pulling candle. It did, and the market went straight up from 01. It's been as high as 28 so far. This is our target that I marked up early this morning. This was the low volume area node. Right? Now the low volume area nodes move right to exactly on the 50-day moving average on the daily. Check that out, right on top of it. So we knew that was our target. We talked about it. That this is going to be major resistance up here. Major resistance. So that was our entry. Now, the market moves up again. Gets a retracement, comes down inside of my trend filter. It's green. We're looking for a yellow trigger entry. Got another one. 19 a quarter. Ran almost 10 S&P points on 2 for 2 on the trades. Your stop integrity's has to be below the swing low here, swing low, if you're trading off of the 135. It's always the swing low. That's your stop integrity. But that's how you trade a 5-minute opening range move. This entry is a 5-minute opening range buy. Got inside of it. The target was the low volume area node right there. Okay. It's going to be hard for the market today to close above the 50-day moving average on the daily. I already established that. The daily's at 31 right there, 31. It's got a lot of work to do to close above that daily. This may be the first close we had since May 1st of 2025. We'll see. We're going to keep it on there. I showed you how to put those on your charts on the first video. I'm not going to go over that again. So these boxes right here now. So that's a 5-minute opening range using our algorithm to punch in. How about these boxes? What are these? I knew these levels before price even came down to them off of a blank chart. How did I do it? I did a whole video on fair value area gaps. Let's take a look how I did it. How it broke out of the 5-minute opening range. They came right inside the fair value gap and exploded. Came inside the fair value gap, exploded. How do you find these fair value area gaps? I showed you guys this morning. I did a video on it also. So this morning at 9 o'clock, I said, hey, here's a fair value area gap. What a fair value area gap is this? Let me get this off here. It's a combination of 3 candles that are together. And there's a gap in between the candles that include the wick. So you see this gap in between the candles? It's a 3-candle combo, and that includes the wick. So I put that up there at 9 this morning for members in the room. And I said, here's what's going to happen at the New York Open. We're going to do one of 2 things. It's got to hold this fair value gap on a retracement, and I put it in here right at this level at 905. I said the market's going to come down this fair value area gap, and it's got to hold. It cannot close below 66.90.5. If it is, we're going to have a short, because that's called an inverted fair value gap. And we had I showed traders how we had an 11-point runner on this. I showed them how to do their automated trail with Ninja. There's an 11-point runner on this trade. The entry was a close below that on a 116 entry. Close below that. Nice little runner. I showed traders how to do that in the room. But then what happened was the opening range came out. The 5-minute opening range. The market opened up and traded for 5 minutes. And it got this high of the opening range and low. And here was a candle that told you that this thing was ready to go to the upside. This is the qualifying candle that closed above the 5-minute opening range off the 1-minute chart. Once it closed above the 5-minute range and broke a previous high, which it did, broke a previous high here, broke a previous high there, then you're qualified to look for a pullback long. Market pulled back. My yellow trigger entry candle fired exactly into the fair value area gap zone. Check this out. I showed a fair value gap zone at 9:05, 35 minutes before this market even came down into the zone after it broke out. It broke out, retraced, came right to the zone, yellow trigger. Market took off. So you can look where the fair value gaps are. Here's another fair value gap. Big gap between a 3 candle combination. There's the wick. There's a bottom wick. There's a top wick. There's a bottom wick, 3 candle combo. Look what the market's doing right now. That's your new fair value area gap that's holding. Right? So when that came up, we were up here. Market comes down, and guess where my algorithm fires along? Right inside the fair value gap. Fired right inside of it. Fair value gap long. Came right down to it. Fired it for almost a 10-point trade. So my point is, when you see these yellow triggers that come up, you can pinpoint which one could possibly be the next possible big runner. Why? You can use the fair value gap technique I showed you on the opening range. Wait for the first 5 minutes of the opening range and look for the first yellow trigger in the direction of our trend filter. If the trend filter is green, because we back tested this over 30 years, you get a 5-minute opening range in the direction of the trend filter. It's a very simple opening range technique using our algorithm. And if you want to get fancy with it and you want to really pinpoint it with order flow, you add the fair value gap to give you confluence. And I just showed you how to do it. And I did previous videos, how to come up with the fair value gap right at the New York Open. We'll do it again next week. We'll do it again next week for you guys, Wednesday, Thursday, and Friday, and show you the 5-minute opening range, how to use it. So very simple. Recap, 5-minute opening range broke out. You draw lines from the first high and low of the first 5 minutes. Once it broke out, energy was up. Look for the first retracement. Our trend zone turned green. That's good because it was a breakout. If we broke below the opening range, I want to see a red trend zone and then the retracement. And we took that first 5-minute opening range. A lot of traders will just trade this 5-minute opening range with our algorithm. We'll just trade the first 5 minutes of the opening range with the algorithm. Okay, we're critical level, guys. Here's my level. This is going to be the bears and bulls going to fight it out. We're at the daily chart right here at 67.30 on. We talked about this earlier. Gerald, shut that off. There you go, Gerald. How to trade the 5-minute opening range with our liquidity grab entries. That's simple. Very critical level here, guys. Can they close this? Is this going to be the first time? Is this going to be a historic event right here? We're going to find out. Is this going to be the first time they close the S&P below the 50 since May the 1st? That's what kind of bull run we've been on. Are they going to do it again? Are they just going to roll it back over and tank this market? We're about ready to find out. Look at that. This is the profit area on those two trades. This is a low volume node. That's why I said take profits. This is critical level, guys. Critical level. We're going to find out. All right, any questions, let me know, but that's how we trade the 5-minute opening range. 5-minute opening range, low volume node moved up a little bit. Low volume node moved up a little bit. The low volume node right now is right at the 50-day moving average. Check that out. Not only got the 50-day moving average that keep this market, they got the low volume node right at the 50-day moving average on the daily. Right there. Talk about resistance. Holy smoke. You break out of that. Hello, short covering. Whew, this market could get silly to the upside.